recently we've seen investors sitting on the sidelines. It's much the case in many other markets where investors are just awaiting corporate results to see where they should be making their investment allocations. Today, a bit of a pickup, but is it a significant enough pickup?
With respect to the bond market, we did see yields rise up, both on the 5-year and on the 20-year, primarily in reaction to the 12.1 or 30 basis point increase of the inflation. So we did see buying interest on the 3-year for investors, and we did see some selling interest on the 5 and 20-year, primarily reaction to the inflation rates, which went up 30 basis points.
All right, you're talking to us about the bond markets there, and definitely we've seen some demand for government bonds. What's driving up that demand?
Well, everyone is just looking for yields. Investors are looking for yields. We've seen buying interest across not just the pension funds, not just the banks, but even the retail markets. We have seen individuals show a lot of interest in treasury bills, and so it's just a search for yield. And for now, the government securities are offering that yield, and so investors are, both the banks and institutional investors and individuals are active. Obviously in terms of capacity as they can in the bond market.
Now, banks have been major buyers of bonds. Where are the pension funds? Where are other institutional investors?
The pension funds are very active. The institutional investors, the insurance companies, like I mentioned, even the individuals are very active. The individuals more in the treasury bill markets, 91 to 182 and 364 days. And the institutional investors, and especially the pension funds, are very active in the bond markets. There was a lot of pickup of bonds at the beginning of the year, and we're still seeing that interest up till now, which is why we have seen the downward trend in yields from beginning of the year. The 3-year has moved from the 10% levels now to 9.1 today.
All right, talking to us about yields, but let's also talk about rates increases and the impact that the recent MPC decision may have had, especially on short-term treasury bills. Is it all a function of decisions taken by the CBN?
I think it's not just the decision taken by the CBN, because if anything, the decision taken by the CBN was actually more of a tightening. And what we saw was there was short-term reaction, yields moved up maybe 2 days. But we can't ignore the fact that there is a lot of liquidity in the market, and so we have seen that pressure just driving the yields down.
Liquidity is almost synonymous with AMCON and what they're due to do, but we have seen some concerns being raised in the interbank market with regards to rising rates and whether or not we might see a sell-off in that space. How could AMCON's activities help to impact on bond prices, as it were?
I'm not sure AMCON can help. I think the main fear for banks is the fact that CBN might pull the guarantee in June. And so a lot of interbank counterparties, people would start to reevaluate interbank counterparties. But I think obviously what AMCON has helped to do is AMCON has cleaned up the books of these banks. It's left to what we term the healthy banks to sort of get comfortable with these banks, that they have been truly cleaned up. And you can sort of start to allocate the risk you're comfortable with in dealing with these banks.
All right.
So I think it's primarily that fear. It's primarily that fear that might drive interbank rates.
Okay, and very briefly, reports of money leaving Nigeria for Ghana for higher yield. Any truth to that, and what do you make of it?
Not really. We have seen, I think there's been a bit of loss of confidence in the Ghana market because of the sharp depreciation they have experienced all through last quarter, coming into this quarter, which has sort of put a bit of pressure on yields as well. I think the 3-year closed at above 13% levels recently at the last auction held. We haven't seen much flows going from Nigeria to Ghana. There still is enough yield within the Nigerian market for Nigerian investors to stay within Nigerian market.
Thanks so much to you.
Perhaps foreign,
but
not Nigeria.
Thanks so much to you, Oyinade Ogunade.